can you see my slide now? On tutorial investment incentive.
Yes, madam.
Okay.
Yes,
So
madam.
today we look into this question on pioneer status. All right, using this question number 1, 2, 3. There's supposed to be 4 questions, but we only managed to do 2 questions in the last class. So we'll see how we are doing in this class. Yeah. So if I have given you the tutorial question, I expect you to do the question before the class, before the discussion of the tutorial. All right. The benefit of you doing the tutorial before the discussion is that during the discussion, you will understand better and you can see where you did the mistakes. All right. Or where are the areas that you need to do adjustments or where you can further improve. Yeah. But if you do not do that earlier and then you just carry on with the discussion, so you will not benefit so much. Yeah. Again, it's up to you. You are matured students, you are adults. So if you do it, that benefits you, right? It will not benefit me so much, right? But you are the one who are actually doing, who are studying, who are actually taking the exam later. All right. So I will say these ones only. All right. Given tutorial before discussion, I expect you to do the tutorial question first. Yeah. All right. Question number 1, we have Darling Sedia Berhad is a company that carries on 2 businesses. The first business manufactures computer parts for which the company has obtained pioneer status. The second business trades all computer hardware parts for recycling process. The information relating to the business for the year of assessment 2019 are as follows. Yeah, so you have Pioneer business, business 1, the business has an adjusted income of 184,000. Yeah, so you have adjusted income of 184,000 and you also have a capital allowance. For non-pioneer business, business 2, having a loss of 1.144 million. And then you have a capital allowance of 156,000. You also have a balancing charge of 39,000. And in addition to that, you also have adjusted rental income from a shut house that amounted to 338. Required compute the chargeable income of Darling Sedia Berhad for YA 2019, indicating the amount available to be credited to the exam income account. Yeah. So you're required to do 2. One is to compute the chargeable income and the other one is to show how much is the amount credited into your exam income account. Okay, for this question is a warm-up question where you only have 1 year of assessment, which is 2019. You are required to do and you are given, one is a pioneer business, business 1, and the other one is a non-pioneer business, business 2. And pioneer business 1 having adjusted income and having a capital allowance, but non-pioneer having a loss of 1144. All right, on top of that, you also have balancing charge and capital allowance. So how are you going to do this in your format? All right, so we have Darling Sedia Berhad. So given this, all right, I told you that you should be able to come out, all right, whenever you do test incentive, you should know how to compute your chargeable income from the top. Yeah. So you have pioneer status and then you do have the non-promoted, all right, or the non-pioneer business 2. So these are 2 businesses that are given in the question. Yeah, non-promoted and the other one is the pioneer status. Okay. So you are given, for example, in this case, adjusted income. So you do the first one, the pioneer business. Yeah. Do the pioneers one, in the information provided, you are given adjusted income of 1.824 thousand. Right? Adjusted income, so nil, this adjusted income is nil. So I always suggest that when you do your pioneer status or when you do tax incentive, you show 2 lines. One is the adjusted loss, the other one is the adjusted income. So if you have adjusted loss, put that into adjusted loss, because I do not want to see you have adjusted income of a negative figure. So that is wrong. Yeah. So in this question, you have adjusted income of 1.824 thousand. There's no balancing charge, but you have a capital allowance. So when you have your capital allowance, I want you to do in this form, right? Whereby you have capital allowance, which is made up of your brought forward, current year, how much is available for the year, how much you utilize from your CA, and how much you actually carry forward to the following year. All right. So because why you need to have this, because when you do your tax incentive, not only you do for 1 year, but normally the question give you 5, 3, 4, or 5 years of assessment. So you need to monitor the movement of your capital allowance, because during few years you will have the brought forward and the carry forward figure, right? So having these lines will help you to determine what is your statutory income. So in this question, because there's only 1 year, so you only have the current amount. Yeah, the current CA, it means that the CA for the year is 39,000. So see, or so okay, 234,000. So you have the 234,000 means that there's no brought forward figure, right? So your brought forward plus your current is how much available. How much you are going to utilize depends on how much is your adjusted income and your balancing charge. Yeah, so in this case, because your CA is only 234, income is a lot bigger. So you're going to utilize all your capital allowance. So there's nothing left behind to be carried forward. So how much is your statutory income? Your statutory income is your adjusted income minus the CA that you utilize. So in this case, how much is your adjusted income? 1.590, right? So that's how you compute your statutory income. So because it's a pioneer status, we say that, okay, pioneer status, from the statutory income, 70% is abated. So you just compute how much is 70% of your SI. So 70% is 1,113,000. So far, so clear?
Yes, madam.
Okay, right. And then from the formula, the law says that, all right, from the 70% abated, you have to minus your current year non-promoted loss. So remember that in this question, you have the non-pioneer business, which is the non-promoted business, and this business having a loss of 1,144,000. Yeah. So 1,144 has to be used against your 70% abated. But how much are you going to utilize? The losses, how much is to be absorbed here? You have loss of 1,144, but the 70% abated is only 1,113. So the 70% is smaller, so you only use 1,113. So what's the balance? You have 1,144,000, but you utilize how much? You utilize 1,113, right? So balance is, how much the balance? 31,000. So means that you're having loss of 1,144, but utilized against your abated is 1,113. So you have a loss of 31,000, which is not yet utilized. Yeah, 31,000 of non-promoted loss, which is not yet utilized. You don't have any promoted loss for the year. So in that case, your exempt income is none or nil. Yeah, because why? Initially, you have 1,113 million. But then, right, 1.113 or 1.113 million or 113,000. Yeah. But because you have losses from your non-promoted, so there's nothing goes into your exempt income. So this is why we say earlier that if you are applying for a pioneer status, you must make sure that your non-promoted company or business is making a profit, right? Because if it's making loss, so this is what happened, it will absorb your abated income. So if you have losses, then the losses will reduce how much goes into your exempt income, so it does not benefit the company, right? So you only have to show this, all right, your exempt income, how much goes into your exempt income, but this computation does not goes into any of the tax com, right? For your non-promoted, how much is your adjusted loss? Again, it was 1,144,000, right? Because of that, you have zero adjusted income, but you do have a balancing charge. What did I do? right? You do have a balancing charge. I think that is 39,000. And your capital allowance, as I showed earlier, that you show me your capital allowance in this form, brought forward. You don't have any brought forward. But current year, you have a capital allowance of 156,000. Yeah, so 156,000, how much is available? Brought forward plus current, 156,000. You have 156,000 CA, but how much you're going to utilize depends on how much is your adjusted income here. So even the adjusted income is nil, but then you have a balance charge of 39,000, so you're going to utilize 39,000. So if you utilize 39,000, mean that you have CA available to be carried forward of 117,000. So once you have this 39,000 to be set off against your balancing charge, it means that your statutory income is nil. Here, remember, this statutory income is actually from your non-promoted business. You don't have any unabsorbed loss brought forward, but then your rental income, aggregate income is how much? 338,000. So from here, 338,000, that would be also be your aggregate income. So remember that if you do have a statutory income here, all right, you add your statutory income with your other income. Yeah, your other income, but in this case, because your statutory income is nil, that's why your aggregate income is only your rental income. So later we look into a question where you do have this unabsorbed loss brought forward. All right, aggregate income, and then remember that, do you have non-current year, non-promoted loss? How much do you have? Initially, loss from your non-promoted is 1144. You utilize 1113 against your 70% SI. So the balance 31,000 is actually can be used to reduce your aggregate income. Yeah, so you utilize the 31,000 unabsorbed non-promoted loss, 31,000. You have any promotion, any donation? No, you don't have any zakat. So because of that, your total income is 307,000. 338 minus 31,000, you have 307,000. And remember that your deemed total income is 30% of your SI. So where do you get the 30% of SI? From your promoted product or promoted activity, 30% of your SI, which is 1590. So here you have a 30% of 15, whatever it is, right? So you have 477,000. Then total together, your total income plus your deemed total income, then you have a chargeable income of 784,000. Okay, so this is, so you have the question asks for chargeable income. The question also asks for the exempt income account, right, which is the zero here. So this is how you do question for your pioneer status. You always start with pioneer and then compute what is the exempt income account. And then start with the non-pioneer or non-promoted activity and then compute your aggregate income, then your chargeable income. Remember that this area does not goes into your, it does not goes into your what computation. Yeah, it's just that I want to show exempt income account. All right, any question for that? For question number 1? Okay, if not, let's go into question number 2. Question number 2, we have, all right, now you see there are 5 years of assessment here, YA 2020 to YA 2024. No Cheating Sdn Bhd was incorporated in 2010 and has 2 business activities, manufacturing and trading. Right, so you have 2 businesses, manufacturing and trading. The company is considering to apply for pioneer status for manufacturing business starting 2020. Company closed account to 31st December, and these are the information. And this is for the manufacturing business, and the bottom one is for the trading business. All right. Manufacturing is the one that you want to apply for pioneer status. Can you apply pioneer status for your trading business? Yes or no?
No.
Why? Can you apply? You cannot apply for trading business because which industry eligible?
Manufacturing, agriculture, tourism, and development companies.
Very good. So means that trading business is non-eligible activities to apply for pioneer status, right? So when you see that you have manufacturing and trading, trading definitely is your non-pioneer business, yeah? So, okay, now you are given 5 years, 2 businesses, all right, you have adjusted income and loss. So you see that here you have adjusted income. So whenever you have negative here, it means that there is a loss. You're having adjusted loss, right, rather than income. For the trading business, you have 2 losses, 5 Z. You have 520 and the 440 are the losses. Right? Remember, you have 2 years that you have losses, and then you have a balancing charge in 2021, and then you have capital allowance. Additional information, you also have interest income and approved cash donation. Compute the following for the YA. For the pioneer status, statutory income from manufacturing and trading business, amount credited to exempt income account, and what is your chargeable income. Right? So what you do is that, all right, always prepare, for example, in this case, no cheating. Right? You prepare in a table form. Right? You have 2020, 2021, 2022, 23, and 24. On the first side, all right, remember that you always type your pioneer status. So I suggest that you always have 2 lines. One is for adjusted loss and then adjusted income, right? So for your pioneer status or for your manufacturing company or manufacturing business, you are given the income and losses here. So what I suggest is that you plug in this information, right? Plug this information into the computation. So what is this? You have adjusted income and then you have adjusted loss. So put into the respective lines and column. Yeah. So for example, here you have adjusted loss. So you put that adjusted loss in 2021. Other than that, you have adjusted income. So plug in the information provided to you. Right. Remember that whenever you have adjusted loss, you always have negative or zero adjusted income. Do not show me that you have a negative 250,000 adjusted income. That is wrong, right? So I do not want to see that in your answer. All right, so once you have plugged in the information, then you have the class capital allowance. So remember that these are the things that you should have in your computation, all right, for your capital allowance. The brought forward, the current year available, utilized, and carry forward. So what are the information provided to you here? Capital allowance here, which one it refers to? Is it the current or the brought forward?
Current.
Current. So once you have that, then you plug in all this current into the computation. Right? So you plug in 140, 100, 100, 100, 180 into the current CA. Right? You plug in that information into your current CA. Now you have that. Okay. Do you have any brought forward from the first year? No, I don't think so. So there's no brought forward capital allowance. So it's 0. Right? So how much is available? Available is actually your brought forward plus your current. Right? So when you have that, your available is actually 140,000. And how much you're going to utilize? You have CA of 140,000, but your income is 630,000. How much should you utilize your CA?
140.
You utilize everything lah. So if you utilize everything, means that there's 0 to be carried forward. But what is your statutory income? How much is your statutory income? Your adjusted income minus CA utilized. That would be 490,000. So that will be your SI for 2020. Then you do for 2021, 2022, 2023, and 2024. All right. Again, for your 2021, there's 0 brought forward. Current year, you have 100. And that means that you have 100 for the available. But how much are you going to utilize? Do you have any adjusted income?
No.
No. So if you don't have any adjusted income, you don't have any balancing charge, it means that whatever that you have, capital allowance, you are not going to utilize anything. So it means that if you are not utilizing that, that amount 100,000 will be carried forward to the following year, and following year you will have a brought forward figure. Right? If you can see that here is 100,000, it's actually from the carry forward figure. Right? So don't make a mistake. What is a carry forward? What is a brought forward? Carry forward to the next year. You brought forward from the previous year. So do not, all right, simply interchange, use it interchangeably. Yeah. So it means different. Right? If you go for your practical training, make sure that you use the term brought forward and carry forward correctly. Okay, so you have a brought forward 100,000, which is from the previous year, plus your currency means that your available is 200,000. How much you're going to utilize? Income is 460, means that you should use all your capital allowance. 200,000 means that there's nothing that is available to be carried forward. All right, so zero carry forward, so you don't have anything here. Okay, but before we go into that, here you have 250,000 loss. It means that your statutory income is also nil. But for 2022, you have income 460. Your utilized 200,000. It means that how much is your SI? 260,000. Then you do for 2023, similarly, you have your zero brought forward, and then current year 100,000. So you have 100,000 available because income 750, use all your CA, means that your CA, your statutory income for 2023 is 150,000. Right, continue to do for your 2024. You will have your brought forward figure zero, available 180, use everything. Then you have your statutory income of 920,000. Okay, until your statutory income, any one of you who are not clear about this computation, you must make sure that you know how to compute your SI given the capital allowance, right, and the circumstances, because if your SI is wrong, everything else is wrong. It may, right, everything else may be wrong. Okay. Hanan Mazlan,
Hello. Yes, madam.
are you okay? Do you follow how to derive your statutory income?
So far I think I can follow, madam.
All right, very good.
Madam,
Let's see another student, No Atira Natasha.
madam,
Yes.
may I ask
Hmm.
for pioneer business? It will benefit the business if they have less CA, right?
Yes, of course. Because remember that pioneer status objective is to maximize your SI so that you can maximize your exempt income. So
Okay.
that's why later we see that if the company is highly capital intensive, it means that you incur a lot of capital expenditure, means that you are going to claim a lot of capital allowance. So if you claim a lot of CA, means that your SI will be lower, right? And then if your SI is lower, then 70% is also low, then the amount goes into your exempt income is lower. But under pioneer status, all right, even though you say that I do not want to claim capital, no, you cannot, because you are deemed to claim your capital allowance.
Oh, so it cannot be like brought forward until the pioneer status been withdrawn,
No,
right? Oh, okay.
depends when you incur the capex. If you incur the capex during the pioneer period, then you have to claim capital allowance. That's why the planning, that's why they have to come up with the forecast about not only on the profit, you must also forecast about your capital expenditure. How much are you going to incur? How much, when are you going to buy your asset, for example? If you're under pioneer status, if possible, you do not want to incur. But remember that normally pioneer status is the period where you expand. So when you do expansion, normally you will incur a lot of capex. So that's why the projection is very important. So that's why before company go for any pioneer status or any other incentive, they will do a projection first and see whether the incentive that they are going to apply will benefit the company the most, right? So here I'm not sure, all right, we only have 1 year having a loss, for example, but you see the computation later, yeah. Even though you see that there are only 2 lines provided for each business, Yeah, 2 lines, income and capital allowance, and then you also have interest income donation. But you see that the computation is interesting. Yeah. Okay. Can we continue from here? Statutory income. So make sure that you settle the statutory income portion at the top first for the 5 years period. All right. You plug in the information provided. Then from there you compute your SI. Can you do that?
Yes, madam.
Right. So once you have your SI, then you compute. That's what is your 70% abated. So how to compute 70%? 70% times SI times by your at 70%. So dapat 343. Alright, and remember that you do the same for all that five years. Right? So even though it looks a lot, but actually you are doing the same thing lah. Alright, as long as your method is correct. Alright, so then you have the line for your 70% abated based on your SI. So next, alright, 343. Alright, now you look into your non-promoted loss. Okay, your current year non-promoted loss. So look back the question. You have first year and the second year, you have loss of 520 and 400. So how are you going to do that? Remember that for the non-promoted, whenever you have loss, the loss has to be utilized against your 70% abated income. So in this case, your 70% abated income is 343. Loss is 520. So loss is bigger. It means that you don't have to use all the losses 520, but you only use how much? 343,000. All right. So how much is the losses available? You have initially 520. Nampak tak? You have 520. All right, 520, and then you use 343. Command Z. So what is the balance? 177,000. Okay, so remember that 177,000 is actually the balance of the losses available to be set off against your aggregate income. Yeah. You don't have anything promoted loss brought forward from your pioneer status yet because your pioneer is making a profit. So you don't have that. So because of that, even though initially you have 70% abated of 343, but nothing goes into your exempt income because everything is absorbed by your losses from your non-promoted business. So that's why under pioneer it's very important that you have to focus. If you have other business or other activities which is non-promoted, make sure that it's not making a loss. Because why? If it's in loss position, the losses will reduce the amount to be exempted. All right, the amount that to be credited into your exempt account. Yeah, so this is also important. Right. Now we go into the 2020 non-promoted. Remember that non-promoted you have a loss of 520. So put that information 520. You don't have any adjusted income, right? Because you have a loss. But the company have a balancing charge. All right, balancing charge is given only for 2021. So this information, all right, the adjusted income and loss for the non-promoted or for trading. Similarly, you can plug in this information into your computation. You can plug in your adjusted income and loss. So for example, here adjusted loss and income. Right, so this year you can already plug in the information. You have losses in 2020 and 2021, and then you have income. Yeah, income 2022, 23, and 24. And then you also have a balancing charge. Which year you have balancing charge? I think there's only 1 year. So plug in that information in 2021. What about your capital allowance? Remember, you are given capital allowance for the current year. So plug in 240, 200, 200, 150, 150. Plug in into your current capital allowance. So if you have the format there, then you can plug in the information, right? So once you have that information, then you can start with your brought forward figure. You don't have anything here. So how much is available? How is 240,000? How much you're going to utilize? How much CA to be utilized in your non-promoted?
0.
Because you have adjusted loss. So 0 there. How much carry forward? 240. Right? 240 will carry forward and your income here is nil. Why? Because you have adjusted loss here. So here is 0, and then remember that this 240 is to be carry forward to next year. Next year it becomes capital allowance brought forward. All right, you see that is 240,000 there. Right, because you have a brought forward figure for 2021 plus your current, then available is 440,000. How much you're going to utilize?
280.
280, because why? You have a balancing charge here. Even though adjusted income is nil, but you have a balancing charge here, so you're going to utilize 280,000. So the balance 480 minus 280, 160, going to be carried forward to next year. Then next year you have a brought forward of 160,000 plus 200,000, which is your current year. Then you have available is 360,000. How much are you going to utilize? All right, remember that now you have 800,000 income, means that going to utilize all of your CA 360. That means that there's nothing to be carried forward, right? So then you do for the next 2023, 2024, fill up that information. All right, 0, available 150 because income 1.4 million, use everything. Then nothing is to be carried forward. All right, so I hope that you understand. Are you clear about this portion capital allowance?
Yes.
Okay, so for 2020, remember that you have losses here. So it means that your statutory income is nil, even though here you have losses, but you have balancing charge. But still, because you have enough CA to absorb your balancing charge, so that's why you see that for this year, all right, all these you have your statutory income from YA 2022 onwards only. Yeah, first 2 years you don't have any statutory income. So far so good?
Yes, madam.
All right. Remember that this statutory income is from your non-promoted. So you do not have the 70-30% lah. Right? You don't have to do that yet. Okay, for 2020, you continue, you have interest income. So remember that you have interest income here, 80, 80, 90, 90, 100. Plug in that information into the format. All right, you plug in the information of your interest income. Then from there, you compute what is your aggregate income. So here, aggregate income is actually this area. All right, from your statutory income minus loss. All right, minus loss brought forward plus 80,000. So you don't have any loss, you don't have any statutory income here, means that your aggregate income comes from interest only, right? And then you have less current year non-promoted loss. How much is your non-promoted loss available? How much you have non-promoted loss? Initially you have 520, but then that 520 you have utilized against your pioneer status. All right, 343,000. So the balance 177. So how much are you going to use here? Loss available 177, but you only utilize 80,000. Right? If you put 177, then you will have a negative income. So that is not acceptable. Right? So that's why you only have to put 80,000. So what happened to the balance? What happened to the balance?
Carry forward to the next year.
You carry forward to next year. So where would it, how much is carry forward?
97.
You pakai 80,000 tadi kan? So now tinggal berapa? Tinggal 97,000. 97,000. So 97,000 should appear here. 97,000. Yeah. Your loss brought forward appears here as loss brought forward. So it should be 97,000 here. But remember that this one is a loss, right? So, but you have statutory income of 0 here. So you should not have lost 97 here because you akan buat 0 minus 97 plus 80,000, which is wrong lah. Right? So it means that here it cannot appear as 97,000. So what happened is that this 97,000 we are going to carry forward to the following year. Right? But here you have 417,000. So how do you get that 417,000? I will show you later. Okay, let's come back. All right, just I want to show you that this 80,000, you have a balance of 97,000. That 97 appears under unabsorbed loss brought forward in 2021. Right? So because 80 minus 80 does 0, so it means that you are not, even though the company do donate 10,000 in 2020, but you cannot claim any donation. Why? Because 80 minus 80 does 0. So once it's 0 means that you cannot claim any more donation, or even though you do actually make approved donation, you cannot claim. Why? Because there's no more income to absorb your donation. Similarly, there's no information about zakat. So your total income here would be nil as well. Yeah, because 80 minus 80 is 0. But your deemed 30% income is always there, which is 30% of your SI. Where is your SI? Here. SI here, 490 times by 30%. That will be your deemed total income. And for that, you're going to have a chargeable income of 147,000. Okay, before we go into 2021, any question? No question? Okay. All right. Now let's go into 2021 where you have a statutory income is nil, but then you have unabsorbed loss 97,000. So 97 cannot appear here. So it means that you're going to carry forward to next year. Right. So I put a 0 here. Right. Remember that here you have a 97,000. Okay. You have loss that you carry forward 97,000. You carry forward to YA 2022. And income of interest is 80,000. So now you still have your aggregate income 80,000. But do you have any current year non-promoted loss? So let's see. Current year non-promoted loss here you have 400,000. All right, and the pioneer status, this 400,000 should be absorbed against your 70% as 70% SI or the abated amount. But for 2020, is it 2021? 2021, your statutory income for the pioneer is 0. So even though the company have lost here, all right, but you're not going to utilize that losses against your 70% abated because it's 0. Yeah, so because of that, you don't have anything that goes into your exempt income as well. But that, for 20, you are going to use against your aggregate income first, 80,000. So how much is the balance of losses? 400 minus 80,000. How much is the loss? 320. So the 320 you're going to carry forward next year and it will appear here. So that's how in 2022, first you have the brought forward from YA 2020, not utilized in 2021. Now you carry forward to 2022. But then you also the other 320, which is from your business too, right? Then the balance is 320. You add together. That's how you get loss of 417,000. Understand? If you were to explain again, let's see. Rafiki Akmal.
Yes, madam.
Explain again how you get 417,000.
So the 97,000 is the balance from 2020's loss, but then it cannot be set off against 2031 because statutory income is 0. So we carry it forward with the loss from 2021, which is 320,000. So the total is 417,000. We set off against 2022 statutory income.
Again, sorry, the last part I tak dapat.
So yang the total from
417.
417 we set off against the 2022 income.
2022 statutory income. Alright, very good. Yeah. So it means that you understand, yeah. So that's how it means that for aggregate income 2022, what will be your aggregate income? Aggregate income will be 440 minus 417 plus 90,000. So you should have 113 as your aggregate income. Do you have any more current year non-promoted loss? For 2022, you don't have any current year loss because you're making a profit. So that one is 0. Right? Can you deduct your donation now?
Yes.
Okay, 2021, okay, coming back ya. Tadi I nak tunjuk 417,000 kan? Sebab how you actually get 417. So coming back to 2021, even though you do have made a donation of 10,000, but again, you cannot claim any donation because this one does zero rise. 80 minus 80,000, 0. So it means that your total income is 0, your 30% is 0 as well. So no chargeable income for 2021. But for coming to 2022, alright, you have an income of 113, don't have any more losses, so means that you can claim your approved donation. How much you deduct? How much? You donated 10,000. Can you claim 10,000? Yes, because approved donation is 10% of your AI, whichever is lower. So you donated 10,000, 10% AI is 11.3, so you can claim all your donation. Right, for that you have a total income of how much? Your total income?
103.
Yes, 103,000. Then you plus your 30% of your SI. That's how you get 181,000 chargeable income. All right. Okay, next is that when come to 2023, right? You don't have any more losses brought forward because everything has been utilized. There's no more loss during the year. Right, and then you plus your 90,000, aggregate income will be 1,340,000. Yeah, and then current year loss, there's nothing. You don't have anything there, but then approved donation, how much you donated? 12,000. Can you claim 12,000?
Yes.
Why? Because that one is lower than the 10% of your AI. So you can claim 12,000. 10% AI is 1,340. Yeah, 13,400. So you donated 12,000, so you can claim everything. So what is your total income is 1,328, and then 30% of your SI. So your chargeable income would be 1.523. And then you continue with your 2024, whereby you have adjusted income of 1.85 plus interest income. You have aggregate income, and then there's no more losses available, but you can claim your donation. Total income plus 30%, so you should have chargeable income of 2,214,000. Is that clear? So
Yes,
that
madam.
is the full computation of pioneer status for 5 years with 2 business. One is promoted, the other one is a non-promoted. Question. So this question, all right, even though it looks lengthy, but if you know how to actually tackle the question, all right, put in all the information provided, so you should be okay, right? This one sometimes it takes me a very short period of time to mark this question, even though there's a lot of ticks there, right? But normally kalau your chargeable income, you get to that amount, all right, normally I know that you actually do it correctly. Okay, starting from statutory income, and then I check your chargeable income, then I can give you either full marks, or if not full mark, then I have to take longer time lah, because I have to check where you did wrong lah, right? And then which one I should give T or not. Okay, all right. Question for no cheating, Cindy Abraham. Okay, in this case, how much is the total exempt income? You want to see that this total exempt income actually, kita tak buat kat atas Oh. Okay, let's see. Okay, 2022, 260 is 70%, 182. Do you have any current year non-promoted? I don't think so. Right? Loss ada 250 guys tu. Okay. Let's see Okay. For 2021, we go back. Kita tak settle kat atas tadi punya. Okay. 250. 2021, you have 250,000 here, loss. And then statutory income is 0. 70% is 0. You don't have any non-promoted. You do have 400 here. Alright, 2021, you do have non-promoted of 400, but you do not utilize 400,000 here. Why? Because your 70% is 0. Right, 70% is 0. That's why you do not utilize your losses. And you do have your losses from your promoted, but again, how much is the loss? 250,000. You do not utilize your 250,000 in 2021, but what happened is that you're going to carry forward that 250,000 to the next year, right? So next year you have 250,000 there. But all right, next year you have income was 182,000, 250 maknanya apa? You are not going to utilize everything. Alright, so it means that kalau you ada 250,000, I think I wrote it somewhere lagi. 250,000, right? Then you utilize how much? 182 saja. So you have a balance of 68,000. So that 68,000 will be carried forward to the following year. So in 2023, you have a brought forward of 68,000. Right? So you have income of 650, 70% is 455. There's no more non-promoted loss, but you have unabsorbed loss from your pioneer of 68,000. So for that, you will have, I think that 387 as your exempt income. Yeah. The 644,000 in the final year, you don't have any loss brought forward. Sorry, you don't have any current year promoted, non-promoted loss, 0. And then you don't have any loss from your pioneer. So it means that everything goes into your exempt income. So this is where it shows that it's very important for you to forecast to see that how much is the available. So if I were to look into, if I want to compare later, all right, what would be my exempt account? It would be 1.031 million. So this is my exempt account balance. So if I were to compare this pioneer status with other incentive, one way is to look at your exempt income. How much is your exempt income? Okay, so we are done with question number 2. Do you have any problem? You better tell me now before you do it on your own later. Which part that you don't understand? Anything? Semua okey je ni?
Okay je, madam.
Wah, bagus Boleh score full mark soalan ni. Alright.
InsyaAllah.
Next we look into the question number 3. Okay. Question number 3, alright, is a bit different. Where it says that Yezal Sdn Berhad is a company incorporated and tax resident in Malaysia. Remember that in order one of the criteria for you to apply for tax incentive in Malaysia, the company must be a Malaysian resident company. Yeah. So how to be a resident company? Anyone? How to be a resident company? Company must have a management and control in Malaysia. What do you mean company having control in Malaysia? It means that during the year, or at least the company have at least one time lah, having meeting in Malaysia, for example, yeah, where major decision is made in Malaysia. All right, so we have Yeza Sdn Bhd is a company incorporated and tax resident in Malaysia in 2019. Board of Directors has approved an expansion plan to set up a production plant to manufacture industrial chemical, a promoted product in Banting, Selangor. So why is it so important to tell you, okay, it's in Selangor? It means that the tax rate normally is 70%. All right, it's not in a promoted area. YSB qualified for either pioneer status or ITA. So remember that we have another topic which is investment tax allowance that I will cover in the next class. So right, so you they are thinking whether should they apply for pioneer or ITA. However, the board is undecided. As the accountant of the company, you have been asked to present to the board of directors on analysis of the tax implication of post incentive. Production day expected to be on March 1st, 2020. Company close account to 31st of December each year. You are provided with the following forecast detail for the period from January 1st. Assume business income accrues evenly throughout the year. Right, so you are given adjusted income and loss, and remember that for 2020 you have a loss of 1.2 million. Right, and then given capital allowance, interest income, approved donation, and qualifying expenditure. Determine the tax relief period because you start on 1st of March, I think. Yeah, March 1st. Prepare an analysis of the tax implication of pioneer status and ITA to be presented to the board of directors with special mention of chargeable income, amount credited to the exempt account, and item and amount carried forward to YA 2024. Your analysis must cover for periods starting from 1st of January 2020 until 31st of December 2023. Based on your computation in B, which incentive will you recommend to the board of directors and why? So this is the most common question for exam, whereby you are given 5 years information. You are going to compute both the pioneer status and the ITA. So once you did both computation, then you have to look at, okay, which one is better for the company? So what are you looking at? Number one is that you're looking at what is the total exempt income for the 5 years. Which one is better, to have a higher or lower exempt income for the company?
Higher.
Higher exempt income, because when you have high exempt income, you can declare exempt dividend, and that is good for the company. Number two is that you want to look at what is the chargeable income for the 5 years. So total chargeable income under pioneer status, and what is the total chargeable income under ITA. Which one is better, higher or lower chargeable income?
Lower.
Lower chargeable income, because lower chargeable income means that lower tax liability. Right, so you have to compare this. Not only that, all right, look also if there is any loss that you can carry forward in the final year of the tax relief period, right? So look at the losses as well. So based on the computation, then you have to present, okay, based on exempt income, based on chargeable income, based on the losses that are available for carry forward, which one is better for the company. So you do columns. You have pioneer status, ITA. So what is your exempt income? What is your chargeable income, and if there are any losses. So these three items you compare side by side, then you see which one is better for the company. Yeah, so okay, but again, it depends on your computation, right? So for this question, because we only have done pioneer status, I want you to do pioneer only. Yeah, and then next class when we cover ITA, you are going to do ITA for the same question using the same information. Right, similarly, you can do the ITA later for your question number 2 and number 1, even though it's not required here. But using the same information, you can do 2 computations. Yeah. Okay. All right. Remember that, right? For this question, the trick is that it's simpler because there's only one business income, which is the promoted activity. All right. There are 4 years here. And then you are provided capital allowance, but remember that the production day starts on 1st of March. So means that you are required to do computation 1st January until 28th of February. So that is 2 months. And then you have 1st March until 31st of December. That will be the pioneer period. So you have the pre-pioneer and the pioneer period. You must show that computation. Yeah. So you have to show me that computation, and then using the same format, all right, then you do the taxcom lah, right? Show accordingly. Anyone have done that? Question number 3. Yes or no? Kalau tak ada tu no lah tu. Yeah. So I want you to do that question first, so that when I discuss with you, you know what we are discussing. Yeah, it's not simply follow je jawapan tu. Okay. So do this question number 3, and then you also have question number 4. Question number 4, actually it requires you to do investment tax allowance, all right, ITA. Because the company is actually applying granted ITA, investment tax allowance. But you can use the same question just to exercise, all right, do extra tutorial question using the same question number 4. What is the chargeable income under pioneer status? Yeah, and then later when we do ITA, you can do this question for ITA purpose as well. And then, all right, you're going to compare which one is better for the company. Okay. So that's it for today. I think that I do not want to go through question number 3 and 4 because none of you have done the question yet. What is the time now? Okay lah, 11:11. All right, I give you extra time for you to fill up your attendance form. All right, and then I'll see you again inshallah next class. Please make sure that before you come to class, you have done these 4 questions under pioneer status. Yeah, because when you do your ITA, you must make sure that you really understand your pioneer status, so that when you do ITA a new topic, then you know what are the differences between the pioneer and the ITA. Right, you get that? Okay. Any question before I stop? Any question? If you don't have any more question, all right.